doesn't know, this is literally the macroeconomics. This is all that matters. So you don't even need the lines. Hide that shit. The Fed stepped in as the lender of last resort right here at this line. Okay, actually, I guess I gotta get rid of these real quick. Give me a second. I'm only going to go vertical lines here. I'm not going to do gaps or anything like that. I'm just going to show you macroeconomic events on the chart, on the days they happened. This was the Fed entering in as the lender of last resort. The money markets basically were making a run. They couldn't, there was a credit crunch basically. No one wanted to lend at low rates. The rates were high, so the banks ran to the Fed to get the lower rates, and they were clearing, basically. And the money market funds then got relief from the SEC to basically allow themselves to lend within their own funds, inter-fund lending, which I believe is still allowed today. That's why you see ETFs and ETFs. Basically, the market started to tank right here. February down into about the time when SLR was implemented, which was March of 2020. SLR was implemented the very end of the month, and then boom, leverage to the tits all the way until when? Basically, the first of this year. Now, the repo really started taking over and going into effect in 2021. So let's go ahead and start marking some more shit. Right here, 4-1, this is when SLR started. I'm going to put that as green or red, actually. Put that as red. And that's SLR. Okay, let's just put a text mark here. SLR. Right there. SLR. Then we have the Fed lender last resort right here. And then you have SLR ending, but before that, what started on the other side of the world? That's right, the China 3 red lines policy. And if you want to know what that is, just type in -3 red lines, as in the number 3 and then red lines, all one word, and you can learn about that. I've gone over it quite a bit. We're going to put China in yellow. We're going to make theirs dotted, like super small dotted like this. Make it a little bigger. And let's keep going. So next we have SLR expiry, which was literally 1 year from 2021, April 1st. Right there. I'm going to mark this one as red again to signify that's when SLR ended. I'm going to make it a solid line showing that it's over. SLR ended there. Let's keep going. Next, we have standing repo facility gets added on the 26th of July. This was the, basically the ceiling of the repo. There's a ceiling and a floor. The corridor monetary policy, that's another topic. And I actually skipped one. The repos really started gaining steam right there. So repos are going to be basically purple. And I'll go over this again to reiterate at the end. So you had the reverse repo start to take off here. You had the standing repo facility implemented here. You had the net stable funding ratio. That was published on the 4th of July over the weekend. It's not even going to show up on the chart. Put that right here. I'll mark that as white. That happened over the weekend. NSFR, net stable funding ratio. We have repo demand right here. We have, I'm going to mark this purple so you remember what it's for. Repo demand, NSFR is white. And then we have the standing repo, which is basically your ceiling for rates. That started then, which they're still using today. So, what else? Keep going, and now we're at the end of this year, right? We're going into 2022 now. 3 red lines policy ended right there. The day after is when, China had a record day that wasn't even talked about in the news whatsoever. So that signifies this policy ending here. SLR ended. SLR started right here. No, I'm sorry, that was not SLR. That was the 3 red lines. My bad. Three red lines. 3 red lines started. 3 red lines ended. Okay, so where are we at? One more thing. This is SLR started here, which was, remember, leverage. And trust me, it all makes sense when I'm done here. Yeah, leverage there. Fed lender, leverage. 3 red line starts, which is forced deleveraging. I better put that in there. Forced deleveraging. I probably spelled that wrong. I don't care. Then you have repo demand. Right here, you have SLR ending. Leverage ending. Okay, so we got everything there. Perfect. Okay, so what's next? We have on the 4th of May. Oh, I forgot one more thing, but it's okay. We'll just leave it off. I'll just explain it. This is when, I'll put it at orange, we raise rates. Jesus Christ, against spell today. Raise rates. So, and remember, during this time here, rates were near zero. I believe they dropped to negative for a certain period of time, but I could be wrong there. I need to double check that. But I know they were at zero at some point. And when they raised them to 0.05 in July of last year, that is when the repo demand really skyrocketed. So let's just reiterate. The Fed lender, and it's still there. The Fed is still there lending for the last resort. September, right around when COVID started. Okay? Or the narrative, or anyway. Money markets were going to shit. Rates were going to shit. Credit crunch. LIBOR, SOFR. Big mess. So the Fed steps in. They get the rates. They leverage everything to the tits. Remember, Goldman made a rehypothecation segregation account in Britain specifically to be able to get unlimited leverage because there's a ceiling in the U.S. So they went to the UK, or wherever they went over there, because they could get more leverage during this period of time. SLR starts, again, supplemental leverage ratio, frees up capital, allows them to continue lending to risky companies, risky investments, allows them to buy up everything under the sun. Go check any of these portfolios by Vanguard, BlackRock, Fidelity, the money market funds that are participants in the repo. They have enormous portfolios. We're talking trillions of dollars worth of securities. And that's directly where the inflation's coming from. Because look, the market was levered here at the same time China was deleveraging, which if you put the MSCI ETF over this chart, it literally makes an X right here at the repo time. Or I'm sorry, right here at the repo time. During this time here is when the X cross starts. But anyway, this is all the shit that goes into it. And this isn't even the full scale of it. This is just what's on the surface, right? In the writing. So you put this out here, right? And you can do a little better. Let me clear this off. This is what happened. Zoom out a little bit. This is what happened. And then what do? You throw a blanket over it, about right here. And in this blanket, you have supply chain issues. You have Russia narrative. You have, just this and that. You have the supply chain's the big one. You have, climate, China narrative. You have Australia, everything. Canada even went through their own little phase of narratives. You have all this shit. But what's the big thing that's the cherry on top of all this? What's the big thing over the top that allowed all of this to fucking happen? And the biggest problem, what's really a problem, is consumer spending has not gone down, which they tried to manufacture with what? The big old blanket that goes over all of it, that they call it, wrap it all up with, and they call it COVID-19. COVID-19 is the blanket over it all. Because without COVID, none of this other shit could have happened. So that's what I'm saying. And where we're at now, with rates being risen, let's take a look. SLR expired here, right here. Repo, boom, right here. New Year, as soon as the new year hit, markets start to reverse. But what didn't reverse during this time? There's a discrepancy here because number one, if the repo's been going up since, right then, what has been going up with it? Inflation. So at the start of the new year, when the markets start to reverse, guess what they're fucking doing? They're shorting the entire market. You happen to think it's a coincidence that this chart here bounced off support? Come on, computer, not now. Jesus, man. You think it's a coincidence that it bounced off support? Let me get all this shit out of your way. Oh my god. Look at that. This line. This line right here. You think that's a fucking coincidence? Of course not. That's when the repo started. So I'm telling you, SPY to the moon. After a retest here, which could happen this week for quad witching, and then it's going to bust up through these support gaps. It's going to close the gaps up here, and then we're going to go into a recession. That's just my prediction.